Hello and welcome to the Stock Planner channel. Yesterday, I did two trades. Actually, I did three. One of those concerned Meta and the other one concerned Microsoft. But I didn't use those symbols. Instead, I traded a leveraged fund for Meta, which was called METU, ticker symbol METU, which was considerably cheaper. And I used the symbol MSFU for Microsoft. Again, considerably cheaper. I'll show you in a minute. But what I did was I sold a call in March in Meta at METU and bought one a month out and did the same for Microsoft. Essentially, this is a poor man's covered call or a diagonal. Again, I'll explain this in more detail, but I did two trades yesterday that I want to tell you about, Meta and Microsoft. Let's get started and take a look at the chart. One can say that Meta recently was in a downturn, then it flipped back up, and then it pulled back again. Now, hopefully, we're seeing a turnaround, and maybe it'll go back up to this so-called level of resistance of 744. The RSI was below the 30, and now it's creeping back up. And recently we had the MACD do a crossover, and that's normally a bullish sign. TradingView, when we're using the daily chart, has said that for Meta, the technicals are recently a buy, and a strong buy is what the analysts are saying. And they're saying it'll go to 858, way up here. So I do think that Meta, over the next year, is going to go up. And if I think that, I want to place a trade that's bullish. But right now, I don't have a lot of money. And to buy some shares, if I had, say, $2,000, I could buy 2 shares. But if we look at this alternative, METU, it's priced at only $31. And you can see that technically, this fund is following Meta just like the stock. Downturn, pullback, and then downturn, and then pullback. And we have the same MACD crossover, and we have the same RSI creeping up after a drop below the 30. The only problem with this is it's a leveraged fund that's 2 times. So when the stock goes up, when Meta goes up, this is going to increase by 2 times. And when it goes down, it decreases twice. So you can have a lot of volatility in this stock. But generally, I'm out 45 days, even a year. Apple, I went an entire year out. So instead of buying the stock 1 or 2 shares and tying up $2,000, $3,000, I can do a trade for as little as $300 out of my pocket. Now, this is a debit spread. In other words, I'm not receiving credit. I'm paying $327. And that's my max loss. The max profit could be $328, almost the same as the loss. And that is if we get to the 35 strike, and that's up here. So I'll have to go to 35 to receive the max profit. But look at all these numbers in between here, and I can take a profit anytime. And this stock only has to move up a little, 40 cents, to start seeing a $24, $25 profit, dollar or two, and you can see $70 or $80. So it doesn't have to move much in my favor. We don't want it to move it against me, but that's called trading. And I gave myself a lot of time. So what this requires is buying a call at $28.50 that expires in April. And then in a shorter time frame that expires sooner, we sell a call. In this case, March 20th. It's about 2 weeks from now. So I need this stock to go up. These are trying times too. This stock can go anywhere because of the Iranian war, tariffs. It can go anywhere. So there's some risk in trading, but the break even is $31.50. So as long as the price stays above $31.50, I have a winner on my hands, and I think I can reasonably expect about $100 profit. Let's look at the chart. And I already drew this because I discussed it a little bit yesterday, but $31.50 is right here. And right now you can see that I'm slightly in the money. And as long as it stays above $31.50, I can reasonably take about $100 to $150 profit for a $325 buy-in. I like this kind of trade. It's risk defined. It suits my trading profile. and the way I trade. I do like to sell puts and take a credit instead of buying, but these are trying times, and I'm definitely a long-term buyer for Meta, especially with their AI initiatives. Over the last few months, Microsoft has been in a downturn, and I'm hoping that it's coming back around. RSI is below the 30. That's normally a bullish sign. And we had a crossover in the MACD. That's a normal bullish sign. So the great time to buy, if you knew this, would be right a few days ago, a week ago. But same boat that we were with Meta. This is a $500 stock. If you have $2,000, you can buy 4 shares. But with this leverage ETF or fund, this is again 2 times leverage fund. So if it goes up, like Microsoft is, it's going to go up very quickly in price. But this is only $28. And we have the same downturn. RSI works the same, below the 30, normally bullish. Crossover on the MACD, that's normally bullish. That would have been a time to buy a few days ago, just like the stock. And we're hoping it goes up. Flipping back over to Microsoft, you can see the analysts and the technicals. The technicals are still in a sell, long-term sell, but the analyst rating this a strong buy, and they're saying this is going to go up 46 to 47%, as high as 594, way up here, and that's a year out projection. So if you think Microsoft is going to go up, you might want to go for a leaps option. Or in my case here, because of the volatility of these leveraged ETFs, I'm just going to go short term, out to March 20th, just like Meta. Do you think it's going up? Do you think Microsoft is going to turn around and go back up? If you do, take a look at this next slide or the next play and see if this strategy works for you. This is Option Strat. It's a free tool. It's a visualization tool. We type in the ticker. We select the diagonal call spread. In this case, it's a poor man's covered call. We're buying a 26 call and selling a 33 call. The 33 call expires March 20th, and the 26 call that's in the money expires April 17th. To do this trade, we need $322 out of our pocket. In other words, this is a debit spread, not a credit spread. It's a defined risk trade. That's our max loss. Our break even is 28.33. Remember that one, 28.33. And max profit, if it gets to the 33 strike, is going to be higher than here. It's going to be $400. This is where I figure it's going to get 31. Go $3-4 up. And if it does, and it does it in this time frame, that's a $200 profit. But I'm really, with a $300 debit, I'd be happy with $100. So I'm looking to make $100 on this trade. And to get $100, all I would really need to do is have this go up to $29.70. And that's really about $2. $28.33, a break even. $28.33. Let's just say it's right about there. And you can set these exactly, but I never do. And this expires on March 20th. And we wanted to get to about $2 increase. And say that that's going to be about 30. So we need to go that high. Is it possible in 2 weeks? Yeah. But as long as it stays above our break even, we'll make some money. $20, $30, $40, $50. And we lose very little. Poor man's covered call. What do you think of this alternative? Now I want to sum it all up for you. We did a poor man's covered call on Meta using a leveraged fund called METU. Our out-of-pocket was about $327, and we expect to make $100 to $150 profit all along here. We're not going to wait till the end, and that would be about a third, so that'd be about 33%, 34, 35% profit on our money, and that's pretty good. Then we did a poor man's cover call on ticker symbol MSFU with $322 out of our pocket, and that's our max loss. Our break even was $28.33, and we stand to make $400, but I'm going to take a profit in somewhere again around the same $100 to $150 price range if it gets there. Meta, poor man's covered call. The slide's showing slightly higher than what the option strat did because I had to pay a little more because yesterday the stock market was going up. And we also did a poor man's covered call, which required buying a long leg and selling a short leg about 2 weeks out. And the net cost was about $3.31, which was total about $331. And if I reached the max profit, that would have been a $72% return, but we're thinking it's going to be more like a third, which is about 33% return. And we're hoping it goes long, but we have to be careful with these leveraged stocks. They're cheaper, but they're highly volatile. And likewise, for our Microsoft trade, it could go as high as 111% increase if it reaches that maximum. I didn't think it was going to ever do that. So what do you think of this? Would you do a poor man's covered call on a leveraged fund? Please leave a comment below. And remember, this is not a recommendation. Oh my, no, never follow anybody on the internet. Do your own due diligence. Learn it for yourself and then win for life. It's all up to you. That's all I have for you today. Happy trading. Follow me on my Discord. It's free. I'm not selling anything. We'll catch you in a flip. Let's have a good trading day today.